Network. TFNN. Headline News Update.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9 a.m. Eastern Time. 30 minutes to go until the start of trading, and we got markets in positive territory yet again, crawling to the upside, but higher we go. We're only about 13 points from the all-time highs we made yesterday intraday. You're looking at the S&Ps up by about 7 points, trading at 42.36. NASDAQ 100 up about 12 points right now, 13,962, bumping up against all-time highs as well. You get the Dow just off that level. You're about 500 points from all-time highs. You see where we are, 34,455. We're 100 points positive on the session. The Russell's positive by 12 as well, 23.17. Bitcoin's up $700 this morning at 37,390. Crude continuing to rise higher. Look at that acceleration in crude. We're talking about $70.41 right now. We were as high as $70.80. Gold contract backing off a bit. We're down $10 at $18.85 in gold. Silver is positive 28 cents. We'll zoom it back in on a 15-minute. There's your silver. Back to gold. There's the pullback we had in gold. Basically, we're at a 19.05 price point in gold at 3 a.m. this morning. Since then, we've given up almost $20, and you jump down to notes and bonds right now. We've paired some of the gains we had, but we're still talking about quite a yield. You got the 10-year right now. You're basically flat at 132.30. We were as high as 133.06. And when you jump, that's going to correlate to pulling up the yield right now. You're talking about a yield at 1.457%. 1.45. Remember, we were just sitting at about 1.63. It seems not that long ago. And that run really taking place over the last week. You're talking about a 10-year that's now driven from a price point, and that is last Friday, you had a low of 131.18. You're almost a full point and a half above that level at 132.30, and we jump over to the volatility index today, Friday. You're talking about volatility getting sucked out of this market. You go from an 18 early yesterday, and we're talking about 1540 on the VIX. This market seems pretty set for the fact that the Fed is going to be there for the long term right now with what we have happening with the CPI data. Transitory is the argument. Seems like the market's okay with that for the time being. Used vehicles, et cetera, some of those compartments of CPI having an outsized impact, and the market taking that to consider that basically it's not as bad as things seem. We're going to make up a lot of jobs. The Fed is going to be in there for the long haul, and we got markets near all-time highs. We got the VIX at 1540, and we got the 10-year yield at about 1.45%. Stay tuned, folks. We come back for the hour. Live programming all day at TFNN. We'll be right back.